Hello everyone. Trading the news. Well, news announcements are important. Economic calendar is very important to watch. However, trading the announcement, this is something, a subject that needs some attention. Let me try and be useful with this video and make you understand my point of view and I know how I approach the news. What do the announcements mean, etc. If you go to the ATC Brokers website, simply go to learn and look at the economic calendar, which is something I really like. It's very detailed, very nice, and customizable. You can customize it according to the time. Let's say I am Eastern Standard Time right here, and you can customize it according to the month, day, whatever you think as good for your trading style. Now let's simply look at what we have now in hand. We have news announcements. It is now Friday, 8:30 has passed, so we had news that come out, and you see the announcement says previous, consensus, deviation. This is important to understand. Let me enlarge this page. Deviation and actual, and the impact. The impact is simple. It's color coded, so you know it's important here. Durable goods, it's important. And if you want to understand the meaning of it, or what does this announcement mean, just click on it. It gives you the details of what the announcement means. And of course the impact is red, which means it has a good impact on the market. Anything related to the US dollar, US related instrument, etc. So the actual, for us to understand this, we need to know the actual, the previous number that came out last month. This is once a month announcement, was 3.3% previous, and the consensus was to have it coming out -1, so less. However, it came out at 1.1 positive from 3, and the deviation, look at the deviation. This is important. So in a nutshell, what happened is that the market, let me just do this a second, bring this up here. The market was expecting a certain number. This number, let's mark it as 100, right? This was expected to come, and last number doesn't matter for now. However, the announcement came out plus 50, for example. So the announcement came out 150. So the number had a huge jump from 100 to 150. So that will create a big impact on the market. So it could go up. However, if it if the announcement was minus, let's say 20, they would be the other way. So there would be a shock. So if the number that comes out big, 20, bigger or smaller, it depends on the deviation. That will create a shock. Okay. The other thing is to look for is this here, revisions. You see, there's a dot here, and it says revised. So meaning, last month's numbers were not accurate. They spent a whole month to go through the files, go through the paperwork, go through the numbers that maybe were delayed, and they added them to the previous number, and they gave you a revision. So there are so many intricacies, so many details of the news announcement that we need to pay attention to, and I'll try and cover that in this announcement. So let's click on the revision. So it was 3.2 last month. It was revised to 3.3. So this is also important to understand. And let's look at other news announcements. Let's see. Of course, depending on what markets are you trading, there's the pound, there's the USD, there's the Swiss franc. from Spain, you have from Switzerland, from the European Union, etc. So one of the most important ones that I pay attention to is the employment change, or non-farm payroll, as we used to call it. And for the U.S., it comes out first Friday of each month at 8:30 a.m. Eastern Time. As you see, this is the number, or non-farm payroll here. Okay, this is from the previous month. Now let's have an understanding of it. Okay, there's a number. There is the consensus. There is the previous 165K. There's the number, the consensus, and the actual, and the deviation. And of course, there was also revised from 236 to 165. Okay, there was a revision. So what do these numbers mean? Let's understand them. First of all, we had this number 179K. So we have 179 expected. 179K expected. Typically speaking, if we get 50,000 or more, 50K jobs added or more, there's a shock, there's a huge increase, which means it should revive the market. But anything less than 50, it's like, not that important. Then if it comes out minus 50K or more, that is bad for the market, which means, there might be some selling. Again, that's the simplicity of it, but it's not that simple. First of all, when the announcement comes out, if it's plus 50, an experienced trader will start buying, whether buying US CAD, buying the NASDAQ or NAS 100 or SPX, thinking the market is reviving or it's getting going stronger. But they don't pay attention to the revision. What if the revision comes out, this number was already wrong? At the same time, you had plus 50K, but then the revision that comes out negates all this. So the market might go up for a few pips and then boom, down. You're stuck. Therefore, trading the news is a dangerous thing. So I'm trying my best to make sure that you understand the idea behind it. So the deviation is important, okay? Plus the revision of it is important. Now, another thing we need to understand is this. Let's say we are expecting 170. The market is expecting 200K jobs, and this is on Monday. The announcement is on Friday, but the expectation is 200. So depending on this number, on this rumor, you see the market going up. So the 200K announcement, which is the rumor, is pushing the market since Monday up all the way until the announcement time. Now the announcement comes out actually 200 as expected. What does that mean? It means that whatever buildup that happened, anticipating 200K, right? It's already built in. The movement is built in. The pricing is built in. You will see the market actually coming back down, covering this maybe the whole move. And sometimes people don't understand. They will say the market came out positive. Why did the announcement came out positive? Why did the market dip? Well, because it's already, the movement is built in. So whatever announcement came out, it was already expected. It was already built in. So there was no shock in the news. Okay. Same thing with the other side. If it's expected to be a weak number or a weaker number, the market, you see it, anticipating that, and the market is reacting to it since a few days before, and then you see the market coming down and same thing, right? So what's the solution? I mean, I can go on with more examples, but trading the news, it's a very specific thing, and it's very hard to do. Even understanding it's hard, because the announcement comes out within milliseconds, and the markets, people who get the announcement sooner than others will have more advantages. Even then, I don't think there's an advantage, because you don't know how the overall market will react to certain news, and also conflicting news, and also revisions, etc. So what's the solution? These announcements, this thing here, whatever happens, to me, it looks like a short-term effect on the market. So if you are using volume profile for overall viewing the market, that counts more. So whatever happens for that hour, for that day, it might reflect on the market for that day, for that hour only, but overall the market usually respects the volume profile levels. And from my experience is that to avoid certain times of the day, certain times of the hour, certain days of the week, to avoid trading during these days or hours or times, or these time slots will be another announcement that I really pay attention to and try and avoid the markets on that specific day is the Fed interest rates announcements and FOMC statements and conferences. These are very important time slots that you have to mark. Usually it's a Wednesday, 2 p.m. Eastern, but it could be different for you depending on your time zone. And the good thing about this detailed calendar is that it is really detailed. It tells you the speeches, the announcements, what's coming up, so you will have enough information of what's coming, and what to avoid and when to avoid certain markets. Thank you.